Hello dear students, let us start the second chapter of Inter-CA Direct Tax, and that is residential status and scope of income. As I have said in the earlier video of basic concept, we will be doing all the important topics of this chapter again in this video, but let me assure you that 90% of the concept of this chapter will be covered, and for revision this is 100% material which you can use. Now so far as residential status is concerned, remember it has nothing to do with citizenship. It may be possible that you are citizen of any other country, still you become resident of this country. It is also possible that you are citizen of this country, still you become non-resident of this country as per income tax. Now what is the basic bifurcation, what is the broad bifurcation? If you are individual and HUF, you can either become resident or you can become non-resident. If you are resident, further you have to bifurcate yourself into resident and ordinary resident, resident but not ordinary resident, R&OR, RBNOR. But if you are a non-resident, there is no need to bifurcate it. If you are any other person, firm, AOP, BOI, AJP, company, etc., you can be resident or you can be non-resident. There is no further bifurcation. If you stay in this country in this previous year for some higher days, you become resident. And if you was staying in this country in all the past year also for more than some of the days, then you become resident and ordinary resident. If you stay in this country for some more days, then you become resident. But if you were not staying in the past years for the days which they are saying, then you become resident but not ordinary resident. If you are not staying in this country for the days which they are saying in this year, you become non-resident. Means residential status depends on the number of days for which you are staying in this country. Now, the very first section 6 subsection 1, residential status of individual. What is the process flow? You see first of all that whether you satisfy any of the two basic conditions, there are two basic conditions which we will be learning in working note 1. If you satisfy any of them, you become resident. If you don't satisfy any of them, you become non-resident. Now, if you are resident, then we have to check two more conditions which are called as additional condition, which we will be discussing in working note number 2. If you satisfy both additional condition, you become R&OR. If you do not satisfy any or any both of the condition, then you become resident but not ordinary resident. Point to be noted, you have to satisfy only one of the basic condition. But to become R&OR, you have to satisfy both additional condition. Now, what are the basic conditions that you need to satisfy to become a resident? Number 1, you should be in India for at least 182 days during the previous year, either 182 or more than that during the previous year. If you satisfy that, you are resident, don't see other condition. If you do not satisfy that, check the other condition. Whether you are there in the India for at least 60 days in this previous year 2021. If yes, then see how many days you stayed in India for the 4 preceding previous year. For example, I am talking about 2021, then for me the 4 preceding previous year will be what? 19, 20, 18, 19, then 17, 18, 16, 17. I have to see how much number of days I was there in this 4 years combinedly. If in this 4 years combinedly I was there in India for at least 365 days, I become resident. If I do not satisfy this second condition also, then I become non-resident. So first at least 182 days or 60 plus 365. 60 in this previous year, 365 combined in 4 immediately preceding previous year. I have written one example. Acha, before that, how to compute the day? For example, I came to India from USA exactly at 5 o'clock in the noon. Then whether this day will be included in India or not. Then what they say is, if you have the exact timing of arrival and departure, then during the year you calculate how many hours you was there in India, exact hours. Divide that hours by 24, you will get days in India. That is what you can do if you have totally time pass activity and you don't have to do anything else in your life. But generally no people will follow this. And then they have given one alternative way which will be following in the exam. The day when you entered the India and the day when you left the India, that both the days, even for a single minute also, still totally it will be included in India. So if I came to India at 5 o'clock in the noon, the whole day will be included as if I was there in India. Now I have written one example. Mr. Aagam comes in India for the first time on 10th April 2020, leaves on 30th June 2020. He again comes in India on 1st December 20, leaves on 28th March 21. What is the residential status? He is a foreign citizen. I don't care. What I care is how much number of days he was there for the year 2021. Let us calculate. He came to India on 10th April 21. 10th is to be included in India. So in April, 30 total days minus 9, that is 21 days he was there in India. May full 31. 30th June he is leaving India. 30th is to be included in India. So June 30 days. July to November he was not there completely. Now he came directly in 1st December. So December total 31, January 31, February 28 because 21 is not a leap year. On 28th March he is leaving India, so total days will come to 28. Do the total of all the days, it will be 200 days, which are more than 182. The person satisfied the first basic condition, he becomes resident. Now let's say in this example, instead of coming to India on 1st December, he comes on 15th January, then what will happen? No change in April, May, June, no change in July to November. But now in December also 0 days. In January, he came on 15th. So total days will be what? 31 minus 14. That will be what? 17. February 28, March 28. Now the total becomes 155. Can I say less than 182? First condition not satisfied. Let us check the second condition. At least 60 days during the previous year. Yes, satisfied. Now check what are the days in last 4 years. I don't have to check. The question itself says he comes to India for the very first time. So in the last 4 years, he was not there in India at all. So he don't satisfy the second basic condition also. And that's why the person now becomes non-resident. Are you understanding this? Now, once you become non-resident, you don't have to see anything else. You are non-resident. But once you become resident, you have to see whether you fulfill both additional condition or not. Section 6, subsection 6. If you satisfied both additional condition, you will become resident. If you don't, then you will become RB&OR, that is resident but not ordinary resident. Otherwise, R&OR, that is resident and ordinary resident. Now, what are the first additional condition? See, while calculating the basic condition, you have to check how many number of days you was there in during the previous year. But while you are checking the additional condition, we are least concerned with during the previous year, we are concerned with past years. And that's why additional condition talks about past years. First additional condition, you have to check the residential status of all the last 10 years. If I am talking about 2021, I have to see from 1920 till past 10 years, what were the residential status in all that years. I should be resident for at least 2 years in those 10 years. If I am resident in at least 2 years out of those 10 years, I will satisfy the first additional condition. But then compulsorily I have to check the other condition also, which says in the last preceding 7 years, if I am talking about 2021, then from 1920 till 7 years, what is the total number of days in India? Let's say 730 days. At least 730 days are required. So, 2 additional conditions to be satisfied. Number 1, in last 10 years, at least 2 times resident. And number 2, in last 7 years, minimum 730 days should be there in India. If both the conditions satisfied, resident and ordinary resident. Any of this not satisfied, resident but not ordinary resident. Now, once you decide resident, R&OR, RB&OR, NR, but all the times, all the basic condition, all the additional condition not applicable. There are some exception to the residential status calculation. These exceptions are most important for your exam. See, in May 21, that is happened in July 21, I was predicted that this exception should be there in exam, but they didn't ask this. So, in November 21 exam, this becomes the most important topic for you. 4 exceptions are there in which, while calculating the residential status, while applying the basic condition, you will apply only the first condition of 182 days. You will not apply the second basic condition of 60 plus 365. If you satisfy 182, you will become resident. If you don't satisfy that, you will become non-resident directly. When this will happen? It will happen when you are covered under any of these 4 exceptions. The very first exception, you are Indian citizen. Who is Indian citizen? Who himself has taken birth in India or to whom government has given express citizenship. If you are an Indian citizen, you are leaving India for the purpose of employment abroad. When I say word employment, there is a judgment of Kerala High Court. It also includes business or profession. So when you are going to some other country for doing job over there, to start your business or profession over there, you are an Indian citizen. While calculating your residential status during the previous year, check only basic condition number A, that is of 182 days. Don't check condition number B, that is of 60 plus 365. Second exception, if you are an Indian citizen, again Indian citizen, you are leaving India as a member of foreign crew of an Indian ship. Any Indian company ship is there which is going to foreign country, you are joining that ship as a crew member, and you are an Indian citizen, then again while calculating the residential status, will be checking only 182 days, not 60 plus 365. However, if you are an Indian citizen or person of Indian origin, see in the first two cases, only Indian citizens were covered. In the third exception, they have covered two things. Number one, Indian citizen. Number two, person of Indian origin. Now, what is person of Indian origin? Whose ancestrals have taken birth in India, either of the parents, either of the grandparents, and if the birth is before 1947, then even Pakistan and Bangladesh was also part of India. So, if you are an Indian citizen or person of Indian origin, and you are coming to India for visit purpose, in the first two cases, you are leaving India. In the third case, you are coming to India for visit purpose. Then first you have to check whether 182 days condition satisfied. If your stay during the previous year is more than or equal to 182 days, perfectly fine, you are resident. Now we will check both the additional condition to decide whether you are RNOR or RBNOR. But if your stay in India is less than 182 days, then don't lose the battle. Now you can check one other condition, provided first you check what is your Indian income during the previous year, how much you have earned from India during the previous year. See, the word Indian income, when I say, technically it is said by total income excluding foreign source income. So basically it is what? Indian income. If Indian income is less than or equal to 15 lakh, you are a small person, we don't want to check any other condition, we will tell you non-resident. We don't check any other condition. You have not satisfied 182 days also, you don't need to see other condition also, you are non-resident. But if you don't satisfy 182 days and your Indian income is more than 15 lakhs, we will be checking the other condition. And that other condition is 120 days during the previous year minimum plus 365 days minimum in last 4 previous years. So instead of 6365, the condition for you will become 120 plus 365. Point to be noted is, if you are leaving India being an Indian citizen, only 182 days. If you are Indian citizen or person of Indian origin, you are coming to India, first preference 182 days. If not satisfied, then see Indian income. If Indian income is more than 15 lakh, then only check the second condition. But with modification, it will be 120 plus 365. But if you satisfy this 120 plus 365, we don't need to see any other additional condition. We will directly call you RBNOR. We will directly call you RBNOR without checking additional condition. If you don't satisfy this condition also, then you will become non-resident. Simple. The fourth and the last exception, you are an Indian citizen. See, again over here, person of Indian origin is not covered. Person of Indian origin, they have covered only in the third exception. Fourth exception, if you are an Indian citizen, you are not covered elsewhere. What is the meaning not covered elsewhere? You are non-resident as per all the provision, as per the general rules, as per the first 3 exception, you are non-resident. However, your Indian income is more than 15 lakh and you are not liable to pay the tax in any other country also on this Indian income. Then can we say you became non-resident intentionally to avoid the tax? And that's why if you are an Indian citizen, you are non-resident as per all other provision. You are not supposed to pay tax on any other country or any other territory. Your Indian income is more than 15 lakh. You will be declared by default RBNORs. Directly RBNOR without checking your number of days, as per section 6 subsection 1A. But this point is applicable only if your Indian income is more than 15 lakh. If it is less than or equal to 15 lakh, still you will become non-resident. So, there are so many permutation, combination and examples that I have given, but that I have given on our fast track course, which is available on online.jkshare classes with all the module exercise questions. These are just the revision lectures for the last day. So, I have not covered that example over here. But from the provision, you can understand it easily, and I have prepared a chart so that it becomes very easy to understand. Otherwise, this exception which are written in module in a very theoretical note, that is pathetic. Even in our JKC textbook also we have given the chart. So, these are the exception. First two cases while you are leaving India. Third while you are, visiting India. Last one while you are not covered elsewhere. Now, once you decide that you are a crew member of an Indian ship who is going to foreign country, then we know that while calculating the residential status, we have to see only 182 days and not any other condition. However, there is a rule number 126 of Income Tax Rules 1962, which says that for a crew member, while calculating number of days in India, you have to apply a specific formula, and the formula is either 365 and if leap year 366 days minus how much days you were there in the ship, that we can identify from a certificate which is called as CDC, Continuous Discharge Certificate. So, from total number of days in a year, deduct the days as per Continuous Discharge Certificate, balance will be the days as per India. As I said, Kerala High Court judgment, in the first exception, employment includes the word self-employment also. So, that's how we decide the residential status of individual. Now, how we decide the residential status of a HUF? See, we can't say how many days he was there in India. HUF is always there in India, registered in India. For that, we have to see where is the control and management. Control who is taking the key decision, management who is doing the day-to-day operation. They may be in two different cities, they may be in two different countries also. So see, where are the control and management? If control and management is only outside India, control is also done outside India, management is also fully outside India, HUF become non-resident. But if control or management is wholly or partly in India, HUF becomes resident. But once HUF is resident, we have to decide whether it is R&OR or RBNOR. And for that, government said, check the both additional conditions satisfied or not by Karta. Now understand, once you satisfy the section 6 subsection 2 wali condition, that is of control and management, you don't need to see basic condition for the Karta. You directly need to see additional condition of Karta. Minimum 2 years resident in last 10 years plus minimum 730 days in last 7 years. If Karta satisfied both additional condition, then you become R&OR, otherwise you become RBNOR. Point to be noted is, it may be possible that your Karta himself is non-resident because he don't satisfy his basic condition, but still your HUF can be R&OR and RBNOR because Karta satisfied directly additional condition. So, there is no linkage between the residential status of Karta and HUF, it can be totally different. How to determine the residential status of firm, AOP, BOI, AJP? Section 6, subsection 2. You have to see where is the control and management. If wholly outside India, then non-resident. Wholly or partly in India, then resident. Same like HUF. But there is no further bifurcation. Why? In HUF, you could have bifurcated based on the additional condition of one Karta. In firm, AOP, BOI, AJP, there are too many members, too many partners for whom you will apply additional condition. That's why we don't want to bifurcate further. Resident means only resident, R&OR. Last, company. How to decide residential status of a company? Section 6, subsection 3. If you are an Indian company which is registered in India, you become directly resident. Don't see any other condition, you are directly resident. But if you are other than Indian company, basically foreign company, we will check where is your POEM, place of effective management, which is decided by CBDT, CA final. You have to see where is your place of effective management. If it is in India, this foreign company becomes resident. If place of effective management outside India, that foreign company becomes what? Non-resident. Are you understanding this, people? Yes or no? The important topic from residential status in your exam was residential status of individual. Others can come in MCQ mostly. But sir, why we are dividing into R&OR, RBNOR, NR? For fun? No. We are dividing it to decide which kind of income will be taxable to which kind of person. And that is said as scope of income, section 5. So now let us understand section number 5, that is scope of income. Here we will be deciding tax incidence in the case of R&OR, RBNOR, NR. See, first we saw how to decide this three category. Now why we decided that? To decide that which kind of income is taxable to them. In a nutshell, we can say R&OR means a person who used to live in this previous year plus all the past years, majority time in India. So can I say he's using the services of India? And that's why each and every income of a R&OR, whether earned in India or outside India, always taxable in India. So for R&OR, global income will be taxable in India. But if he's RBNOR or he's non-resident, each and every income should not be taxable in India. Only few income should be taxable. Now, which kind of income will be taxable to them? Number 1, income received in India, whether or not accrued in India. For example, I am doing job in USA. So basically my employment agreement is drafted in USA, signed in USA. My salary income is accrued in USA. But let's say I am saying to my employer that please credit my salary directly in my Indian account so that my parents can withdraw that. Where I am receiving my salary? Directly in India. Though income is not accrued in India, but somewhere India came into the picture, this kind of income is taxable to all the three kind of category. You are R&OR, RBN or NR. I don't care. All the three category, this income is taxable. But if your income is deemed received in India, deemed received, it is actually not received. You are assuming it is received. Like your provident fund amount, employer's contribution to PF, like TDS that we'll learn in future. Still India came into the picture. This income is also taxable to all the three kind of category. Now let's say your income is not received in India. It is accrued in India, arised in India. Remember, income is said to be accrued or arised in India if your agreement is signed in India, if your invoice is generated from India. Let's say I have a property in London for which there is a tenant with whom I have signed a rent agreement in India. My rental income will be said as accrued in India. Rent agreement drafted in India. Or let's say I am doing job in India, my agreement is signed in India, I am receiving my salary directly in my USA bank account. I don't care because my salary is accrued in India. If your income is not received in India, but if it is accrued in India, then also it is taxable to all the three level of category. If it is deemed to accrue in India, section 9 will learn in detail what is called as deemed accrued in India. Means it is actually not accruing in India, they are assuming it is accruing in India. If it is deemed accrued in India, still it will be taxable to all the three category because somewhere India came into the picture. So if received or deemed received, accrued or deemed accrued in India, taxable to all the three category R&OR, RBNOR, NR. However, if income received and accrued both outside India from the business which is just controlled or for a profession which is just set up in India, set up same as control. So let's say Mr. Biden is there, whose business is there in USA. He came to India for a visit purpose, just 2 to 3 days. His business is there in America, accrued in America, received in America. Now let's say in the journey of 2 to 3 days, he took some key decisions of the business while he was there in India. From where he has controlled the business, India. Can we charge the tax from such non-resident? Answer is no. Because the income do not belongs to India. It is just control from India. If a person is coming to India for visit purpose, whether it is the rule that he don't manage the business, he can't manage the business, no. And that's why this kind of income which is accruing outside India, receiving outside India, just control is in India. It will be only taxable to R&OR and RBNOR, not to a non-resident. This is the first income which is not taxable to NR. But if let's say your business or profession accrued outside India, received outside India, even controlled outside India, nothing related to India. A person is there who is resident, let's say, he's working in London, business in London, receiving their decisions there. This kind of income only taxable to R&OR. It is even not taxable to RBNOR also, not taxable to NR also because India don't came into the picture. So this kind of income only taxable to R&OR. Any other income which is not a business or profession, If accrued and received outside India, for example, dividend of foreign company received in foreign, rental income of a property which is situated in foreign, salary from a job which you are doing in USA, you received also in USA. This kind of income received outside India, accrued outside India, nothing related to India, only taxable to R and OR, not taxable to any other two person. So I can say that taxability of RB, NOR and NR is almost equal except in one case wherein the business is controlled in India, taxable to RB, NOR, not taxable to non-resident. Last. Any income which was of earlier years, you are just broughting it into the India. For example, I earned the income in 16-17 to London and then in 2021 from my London bank account I am remitting it to India. That is a past year income. In 2021 you cannot tax the same. It is not the income of this year, it is merely inflow, and that's why this kind of income is not taxable to any person because it is not the income of this year. If in your question they are just writing remittance to India, you can't assume it belongs to past year. It may be of this year. If they are specifically writing remittance of income for the income which you have earned in past year, then only assume that it is of past year, and that's why point number 8 applicable, not taxable to any person. Only one point is left out in this chapter to understand what is section number 9, deemed to accrue in India. Whatever I am going to share, if these cases are there, those income will be taxable to all the three category, R and OR, RB, NOR and NR. The number 1, case number 1 of section 9, business connection. Let's say I am working in Dubai. My business is in Dubai. I am receiving money in Dubai. But I am sending one agent to India that please find the customers from India with whom I will do all the businesses in Dubai. Can I say my business is run because of the customers of India which was sent by the agent in India? So if due to any agent in India you are doing business outside India, then that income is deemed to accrue or arise in India. Because of India you are earning the income in Dubai. So if business connection is there in India, agent is there is in India, your income is deemed to accrue or arise in India. There are so many exceptions also which are not covered, like if a news channel is just gathering news and views from India, that does not mean income deemed to accrue in India. So if agent is there in India, deemed to accrue or arise in India. Second, if your property is there in India, asset is there in India, capital asset is there in India, any income arising from that asset taxable in India. For example, I have a house property in India. I am living in Sri Lanka. What I am doing is I am preparing a rent agreement in Sri Lanka for the property which is there in India. I am receiving the rent also in Sri Lanka. Income accrued outside India, received outside India. But where is the property? The property is in India. So the rental income of that property will be always taxable in India by section 9. I have the shares of an Indian company. I am the owner of some of the shares of Eicher Motors, let's say. I am selling the shares in other country. The shares belongs to Indian company. Indian company's share is the property of India. Whenever I sell that shares, taxable in India. I am the shareholder of an Indian company. That company declares dividend. That dividend also taxable in India because it is of Indian company. The source is in India. The asset of India always deemed to accrue or arise in India. Then let's say my job agreement is done outside India. I am receiving my salary outside India. But for some days also, I came to India for some marketing purpose, etc. So for those days, whatever salary I will get, that is taxable in India because I have rendered my services in India. So if you render your services in India for those days, the salary will be taxable in India. Then you must have heard that many visa office, embassy office are there. External affairs office, wherein our government officials, our government employees are working outside India. To whom? Who is paying the salary? Government of India. If government of India is paying the salary to any person, even though they render the services outside India, for them the salary will always be taxable in India. So if the salary is paid by government of India for services rendered outside India, it will be taxable in India. So if you render service in India, taxable in India. If you render service outside India but the salary is paid by government of India, it is always taxable in India. Then interest income. when you give the money, you lend the money to somebody, that person, the borrower, will pay you the interest. Now, when this interest income will be taxable in India? You see who is paying you interest. If government of India is paying you the interest, it is always taxable to you in India. Being the lender, it will be taxable to you in India. If you have given the money to any other resident person, the borrower is a resident person, then you see where this resident borrower is using your money. If he is using your borrowed money for any purpose in India, to start the business, to start the profession, to purchase the share, to purchase the property, but ultimately your money is used in India, so whatever interest that borrower will pay you, that interest will be taxable to the lender in India. But let's say you have given the money to a non-resident, the borrower is a non-resident, and if he is using the money to start a business or profession in India, then only your interest income will be taxable in India. Let's say I am a resident person, I have given the money to Mr. John. Mr. John is what? Mr. John is, let's say, a non-resident. That non-resident is using the money, that borrowed money, to start a business in India. Then whatever interest he is paying to me, that will be taxable in India. But let's say this Mr. John is using the money to purchase shares of an Indian company. Then this interest will not be taxable to me. Because if non-resident is using the money for any other purpose, then interest is not taxable to the lender. Now, if let's say you are receiving royalty or technical fee, why you are receiving royalty? You have an intangible asset in your name, somebody else want to use that asset, you are giving the asset on a rental basis, so that royalty which you get for the usage of intangible asset. Technical fee, that is consultancy fee, professional fee, managerial fee. Now, when these fees will be taxable in India, you see who is paying you this royalty, who is paying you this technical fee. If paid by government of India, it is taxable for all. If paid by a resident person or non-resident person, and they are using your intangible asset or your services for any purpose in India, then your income will be taxable in India. What is the difference between the interest wala point and this point? In interest wala point, if borrower is a non-resident, he used this interest, the money for any other purpose in India apart from business profession, interest was not taxable. But if royalty and technical fees is there and the payer is either resident or non-resident, they are using this in India for any purpose, business, profession or any other purpose, still this income will be taxable to you in India. The last point. You are a non-resident. You are outside India, but you are receiving any gift in cash, not in kind, gift in cash from a resident person. Then that gift income will be taxable to you in India. It will be deemed to accrue or arise in India. The exception of 56(2)(10), that is if received from relative, not taxable. If received at the time of marriage, not taxable, blah, blah, blah. That is applicable. But if for any other purpose, if resident person is giving a gift to a non-resident purpose, it is always taxable. After all this, please right now itself you refer the illustration number 8 of our study material module of ICAI. It covers all the concept of scope of income. After watching this video, you go to illustration 8, you solve it, you will cover each and every point of this chapter. This much notes are more than enough for the last day, residential status and scope of income. That is done. The next video will be income from house property. Thank you so much.